as returns can go negative, but cash flow can't. Our goal really is to provide a stability and above market risk adjusted return for our investors.
I guess your diversification of your investor base is kind of all over the board, right? When we think about the cannabis, market, et cetera, right? I mean, just give you interesting dynamic.
Yeah, and you can live in a state that cannabis is not legal in, and you can still invest in our fund. So we're available in every state in the US. From an investment standpoint, we have 25 properties across 5 states today. So we're in California, Colorado, Ohio, Michigan, and New York. And so the portfolio is diversified. And really our goal really is to provide a stability and above market risk adjusted return for our investors. And so we launched in September 2022. Our net asset value, which we calculate on a monthly basis, has gone from $25 a share to $25.16. And our target return is a 10% annualized distribution that's paid monthly. And we've been as low as 10.2 and as high as 16.67. So our investors have had a really, really pleasant experience. And so to kind of get back to the investor base, it's really across the gamut on anybody that wants to help diversify their real estate exposure or is in the phase of life where they're trying to focus a little more on income, right? And they want to retire comfortably. They want to increase their monthly cash flow so they can continue to do what they love to do. And that's the focus and drive.
Yes, cash flow matters at the end of the day.
Cash flow managers. And it's funny because they always say like, as returns can go negative, but cash flow can't, right? It's bottom of what we'll pay is zero. It's not like we can pay you a negative cash flow. So that's interesting. So we see lots of opportunity.
Right. Hey, so think about, right, you mentioned you're in 5 states right now, right? So where do you see the next real estate wave of opportunities as it relates to cannabis in terms of where you can fuel that growth trajectory? I know you're forward looking and thinking about those thoughts now in terms of what's the next move is going to be, how we're going to grow, et cetera, right?
Some of the markets New York, which had legalized a couple years ago, New York had the potential to be a monster in cannabis sales. It was marred with legal action based on the rollout. Even Governor Hochul called it a disaster on the rollout. So they're starting to kind of get through and work through some of those issues. And one of the big issues in New York is when you went to Manhattan, you saw a cannabis dispensary on every corner. And there was a period of time where you had literally 8 legal cannabis dispensaries versus 3,000 illegal dispensaries, right? And those are shops that just set up and don't pay taxes. You have no idea what the quality of the product and potentially cause a health concern for users. And so the government has begun to crack down on those and really approve additional legal dispensaries. And so that's working through right now. So we think the New York market will continue to look attractive. I think New Jersey as well as Maryland. And then with Pennsylvania, while still medically legal, we're still adult use illegal. But if you look at the surrounding states, 5 of the 6 surrounding states have an adult use program. So if I'm in Philadelphia, I can just simply go across the Ben Franklin Bridge into New Jersey or down to Maryland, over to Ohio. I can go up to New York. So it's readily available. So I think the Pennsylvania market also is quite attractive.
Thanks for sharing that. So you think about, right, it seems like that East kind of corridor proven to be for you very opportunistic. How about, I'm sure there are areas that you're like, no way, we won't touch it, turn the other cheek. I mean, for the listeners, any intel in terms of just where the resistance is pretty high and heavy in terms of from your point of view?
So we have exposure to California, and California is a mature market, but unlike Washington or Oregon, where we do not have any exposure, and at Washington State, not Washington, D.C., those markets tend to be a little bit not as attractive for us because fundamental to what we do, Merv, is we look at every opportunity at its core, which is a piece of real estate, right? So we're not financing the operator so much as we're just financing a piece of commercial real estate where you, the owner, have a cannabis tenant, and because of that cannabis tenant, you can't get a mortgage at Wells Fargo, J.P. Morgan, or any other financial institution. But you need capital to grow your business, and that's where you come to funds like ours. And so we look at the ability to bring in a non-cannabis tenant to replace that cannabis tenant, and location, and you know this in real estate, location. And we want to ensure that, that properties that we originate a senior mortgage on, if we need to replace that cannabis tenant with a non-cannabis tenant, what are the particulars that would stand out? So it's location, the closest or proximity to highways, what are the current zoning regulations, what's the population, what's all the demographics that you would generally review. We're keenly focused on those because as a risk mitigation, we assume in every transaction that cannabis goes away. So I need to go out and find that non-cannabis tenant to replace the cannabis tenant. So think of on the retail side, think of a coffee shop replacing a cannabis dispensary, or on the cultivation, which is on the industrial side, getting some other industrial tenant to come in. And what could I sell or lease that property for to the non-cannabis tenant? And that is the value that we assign to that property, and not associate that with a bump in value from the cannabis license that is attached to the property. And that's critical.
You trigger something here in terms of the act. So you say you do not take the cannabis aspect into the value. Are that for all properties, or that's just for specific ones in states, whereas, it may not be as attractive?
No, it's for every deal that we do, regardless of the state. And that's one of the ways, because you can think about really, cannabis can be very volatile. We started this discussion with public kind of versus private. There is an ETF called MSOS, which is, for your viewers, if you want to follow that, you'll see when Trump won yesterday and leading up to it, you saw MSOS fall by 15 to 20% in a single day. And the reason for that was that the markets were, in particular on the cannabis side, were really banking on a Harris victory, which would move to not only legalize cannabis on a national level, but really allow companies better access to the New York Stock Exchange. So if they wanted to list, they would be free to do that instead of being forced to go to the Canadian stock exchanges, which have less liquidity and less institutional markets. So there was a big down day yesterday in light of all the 1,500 plus point rally that we saw. It can be very volatile. So my point is that we're not lending to that operator because and some people do, and there's potentially a good return, but it's just not how we view the world, because we're primarily debt managers and we want to focus on downside risk and protection for our investors.
So you think about protection for your investors, and the future, hopefully upside, what kind of progresses, as you mentioned, right? 38 states have some type of informational referendum that's associated to it. Hopefully it can grow to 50. I'm assuming from your viewpoint, you would like it to see the growth trajectory here across other states as well, as you're looking into the real estate paradigm there. So what would you tell 2025-year-old investor who's looking to kind of get diversified, they're new, considering the cannabis landscape, the ties to real estate? What feedback would you give to a newbie out there who's even thinking about it?
Yeah, I would. The first and foremost is you can never research what you're interested in too much, right? You can never read, visit, see, or just learn about an industry too much. I would highly recommend, if this area, and it is a specialty area of the real estate market, it's a niche play. I'd recommend you could certainly visit our website, sign up for our newsletter, and the website's www.mj-REIT.com, and sign up for our newsletter. We'll provide you a monthly update on what's going on in the market. But then outside of that, there are a number of other daily newsletters that come out, where you can just search on Google and pull up a couple of those. So start reading about the industry, because it's unique, but it's not without risk. You have to know the risks, and it has to be appropriate for your own personal portfolio. Because when you think about cannabis overall, if you go back 3-4 years from today, or 3 years earlier, you saw a huge decline in the public cannabis markets, to where from their highs, some are down 90% from the high. And so, you want to make sure you understand what you're getting into before you actually invest in it. And on the public side, getting back to the public versus private, public markets come with this notion of higher volatility, or the potential for higher volatility. And so we firmly believe in having a mix of those private plus public assets. But for the 25-year-old, I can't stress enough learn about what you're interested in and pursue what you're looking at.
At the end of the day, education is the great equalizer, right? You can never not get enough information, regardless if you're 25, 55, or even 85, right? So, well, good, man. Look, that's a fantastic insights about the inner workings of this respective industry, how you're plugging it into real estate to kind of see the values and the benefits of it, and how investors could benefit of it as well, which is a beautiful thing.
Yeah. I mean, and the great thing is it is truly, back to your very first point of the diversification aspect. I mean, this fits into an investor's portfolio. You can either use it on the real estate side as a diversifier. So maybe you have, multifamily, maybe you have, mobile home parks, etc. So this is another avenue by which you can diversify your portfolio. And then conversely, you The Fed meets today, so they're going to make a rate decision in about an hour and a half. The likelihood is that they'll lower rates by 25 basis points. And so from an income standpoint, those that are struggling with going back to the income component of what we do, those that are struggling to maintain that lifestyle in retirement or as they're getting ready to retire, a strategy like ours may also be worth considering.
Good. Hey, man, thanks for sharing that intel. Hopefully, look, if our listeners haven't gotten another aspect of diversification, I don't know what will, right? Particularly in this respective area. So, hey, Chris, man, it's been great speaking with you and kind of really getting the inner workings of cannabis landscape, what it means, kind of future state as there's a lot of transition going on in the past few days, right? In the coming months. So, man, so why don't will you share, man, for the listeners, how folks can reach you? Again, give the information on your respective funds and how you can be contacted.
Sure, absolutely. So you can go to our website, www.mj, as in Mary Jane, fitting, right? mj-reit, REIT.com, and click on our newsletter, sign up to get insights. If there are any questions directly for me, my email, you can feel free to email me directly at Chris, so CHRIS .Reece, REECE, at mj-reit.com. Happy to get on any calls with any of your listeners that want to learn more, not only about the overall market, but in particular, if they want to learn a little bit more about MJ REIT and the diversified benefits we can provide. It'd be a pleasure to have a conversation.
Well, good. Well, Chris, well, we'll share those notes with listeners and looking forward to finished product here at the end of this overall discussion. And look, man, it's been great speaking with you, understand the inner workings of speaking to the cannabis landscape, speaking to public versus private, getting the listeners education on the variations between the two. And at the end of the day, it's about diversification in every way, shape, or form. Chris, on behalf of myself, my wife, Jackie, thanks for being on the show, man. We appreciate you, sir.
Thank you for your time. I appreciate it. Thank you.
Jacqueline and Melvin, thank you so much for taking time out of your busy day to listen to this episode of Get Diversified. Please make sure to subscribe to our podcast so you don't miss out on future episodes. Finally, stop by our website and follow us on social media. Ciao for now. Make it a great day, and we'll see you next time. And remember, get diversified.